For this session, we are now talking about past 38 intangible assets. So just like any other standard that we discuss on a particular type of asset, we need to determine the recognition, the measurement, the initial and subsequent measurement. So we will talk when do we recognize an intangible asset, how do we initially measure and subsequently measure an intangible asset. Let's start by first defining what is an intangible asset. An intangible asset is an identifiable non-monetary asset without physical substance. It must be controlled by the entity as a result of past event from which future economic benefits are expected to flow to the entity. That is under past 38, paragraph 8. So what is important here, as we said before, in your past 16, what differentiates it with your past 38 is that past 16 is considered tangible, meaning there is a physical substance, while in your past 38, there is no physical substance. Therefore, if there is no physical substance on a particular type of asset, we consider it as an intangible asset. Some examples are your patent, trademarks, copyrights. So those are all considered as your intangible assets. So when do we recognize an intangible asset? We recognize an intangible asset if the following essential characteristics are present. First, it is identifiable. So initially, we said it is considered not tangible, but so that we can recognize it, it must be identifiable, meaning it is capable of being separated. So it can be separated from the other groups of asset, and you can easily identify it even if it is not considered tangible. Next, of course, you control the future economic benefits out of that particular asset. Remember, one particular item that we look now as your recognition of your asset is the essence of control. Regardless if you do not own it, if you control it, then that is considered as an asset. And lastly, there must be an inflow of future economic benefits, be it that an increase in your income, increase in your production, whatsoever, so long as it is considered an economic benefit that will enter the entity, then we have a future economic benefit. So these are the essential characteristics so that we can say we have an intangible asset aside from your probability criteria. It must be identifiable, capable of being separated. There must be a presence of control, even if you don't own it. If you control the economic benefits, then you have an intangible asset. Further, there must be a future economic benefit. So based on that, we have your recognition criteria. You must first meet the definition based on our essential characteristics. It must be identifiable. It must be controlled. And lastly, there must be future economic benefits, including probability and measurable criteria. This is no-brainer to you already. Most of our recognition criteria is meet the definition plus probable plus measurable. So just like any other assets that we discuss, we have the same criteria of recognition. Meet the definition or meet the characteristics plus probable and measurable. Now, how do we measure your intangible assets? We go now to your measurement. So we talk about your initial and subsequent measurement. So initially, we measure it at cost, and subsequently, we still use cost model or revaluation model. We already know what is the cost model and what is revaluation model, and we already know how to measure the cost, whether we purchase through cash, non-cash consideration, issuance of shares, issuance of bonds, exchange, etc. We already know how to measure that cost. Okay, so same rules on your initial and your subsequent measurement. So cost model, revaluation model for subsequent measurement. But one thing is different here. If under your property, plant, and equipment, we have your self-construction, under intangible assets, we have your research and development. So in your research, of course, you are uh, looking into your new knowledge. So you try to look and find for new knowledge to particularly develop and make it as an intangible asset. So research, you look into your new knowledge, development, you work on that particular knowledge that you have researched. So in a research phase, the probability the probability that there is an intangible asset is very uncertain because this is only a knowledge. You are not yet working on it. But in development, since you are already working on it, you have a more apparent probability. Remember, when do we recognize intangible asset? Probable plus measurable. So in research, since looking on a new knowledge, the probability of having an intangible asset is yet uncertain. Since it is uncertain, expense. In development, you are already working on that knowledge. Therefore, the probability that there is an intangible asset is more apparent. So we capitalize. But take note, I place an asterisk here. When do we capitalize a development cost? Research cost, always expense. Development cost is capitalized. So when do we capitalize a development cost? We capitalize development costs if all of the following are present. All of the following. Take note, not one, but all. So everything must be present. So our mnemonic here is ITIME. First, availability of resources. So the resources needed to complete that particular item or intangible asset is present. Next, you must have an intention to complete or finish that development phase. Next, it must reach technical feasibility, meaning it can be used. So once there is a technical feasibility or all of the necessary items or materials to complete that particular intangible asset is present, then there is a feasibility that you can make use or you can finish that. Next, ability to use or sell. Of course, at the end, that intangible asset that you have developed must be capable of being used or capable of being sold. And there must be economic benefits arising out of that. And those economic benefits can be measured reliably. So, ITIME, all of the following. Again, what is the rule? In PPE, in PPE, we have your self-construction and we look into your borrowing costs under PAS 23. But in intangible asset, we call it research and development. Research is expense. Development is capitalized if we have your ITIME, meaning availability of resources, intention to complete, technical feasibility, ability to use or sell, economic benefits, and measured reliably. So AITAEME. Do not memorize this one while you are in a public place because perhaps they will think that you really want to move or you really want to or you need to go to the public CR or to the CR. So when do we capitalize development costs? Only when ITIME is present. But if not, sir, what if not all are present? If not, then we expense it. As a rule, research, expense, development, capitalize if all are present. If not, the development the development cost should also be expensed. Research costs are costs that are incurred in the obtaining or getting of new knowledge, while development costs are the costs incurred in working out of that particular new knowledge that you have researched. Subsequent expenditures. So the general rule is that a subsequent expenditure on an intangible asset shall be recognized as an expense. The exception if it is probable and measurable. So as a rule, subsequent shall be expense except if it's probable and measurable. So how do we amortize? So as we said, PPE, so the cost allocation of your PPE is known as depreciation. The cost allocation of your intangible asset is known as your amortization. So how do we amortize? So we amortize based on the useful life of the asset. Normally, the straight line method. Okay? Normally, the straight line method. However, in your PPE, we have different methods, right? Uniform, activity, accelerated. But in intangible asset, generally, we only use a straight line method. Next, the presence of your residual value. In your PPE, we said that on your residual value, we use this one to compute for your depreciable base. How about in your intangible asset? The general rule is that residual value of intangible asset is zero. Take note of that. It is zero. There is no residual value except if there is a committed third party buyer or there is an active market for that particular intangible asset. Normally in PPE, there is a residual value. In intangible asset, general rule, zero, except for these two items. If there is a committed third party buyer or there is an active market of that intangible asset. Okay, so we're looking into now the differences between PPE and intangible asset. A while back, the first difference is in your self-construction, we have under your PPE, we call that R&D under your PAS 38 or intangible asset. For measurement, initial and subsequent, we have the same, whether PPE or intangible asset. Next, as to your residual value. In your PPE, normally we have a residual value. In your intangible asset, as a rule, it is zero, except if the two items are present, committed third party or there is an active market. How do we amortize your intangible assets? So we amortize finite over its useful life. If it's infinite, it is only tested for impairment. So when we say finite, there is an end over its useful life. So the cost over the useful life. If infinite, it is only tested for impairment. What is the impairment test under intangible asset? We still have past 36. Why? Because under intangible asset, it does not provide for a specific type of your amortization, uh, for your specific type of your impairment. But therefore, we use now your general type of impairment of assets that is past 36. Again, as a rule, if there is a specific impairment test under the standard, use that. If not, you use past 36 for assets. So under past 38, there is no specific impairment. Then we use past 36. Under past 36, what is the rule? Compare carrying amount. If it's greater than recoverable amount, we call it impaired. So how do we impair your intangible assets? For finite, you test it for impairment where there is an indication, meaning carrying amount is greater than recoverable amount. For infinite or infinite type of intangible assets, you test it annually or there is an indication. So when do we test impairment? For finite intangible assets, if only there is an indication. For infinite, we test it annually. And when there is an indication of impairment. And that's it for our intangible assets. Why? Because, guys, normally whatever we learned under PPE can still be used in your intangible assets, except for your self construction and for your amortization. All other else, they are the same. So whatever is the measurement rules, initial and subsequent applies also to intangible asset. So whatever you learned before, cash consideration, non-cash consideration, stock consideration, exchange, it still applies to your intangible asset. Subsequent, cost model, revaluation model, it still applies. What is different only is your self-construction and your amortization. Self-construction, we call it research and development. Research, expense, development is capitalized. If only I time E is present. If I time E is not present, you should expense it. For amortization, that is only your uh, cost over useful life. No residual value, except if there is a committed buyer or there is an active market. Okay? So those are the rules that you need to take note under PAS 38 intangible assets.